Ladies and gentlemen, good day, and welcome to GATI Limited Q2 FY21 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Jakhar, Chief Strategy Officer from GATI Limited. Thank you, and over to you, sir.
Thank you. Hi, good evening, everyone, and thank you for joining us on GATI Limited Q2 FY21 earnings conference call. I'm Ravi Jakhar, Chief Strategy Officer for All Cargo, and along with me, I have my colleagues, Mr. Bala Agoramurthy, Deputy Managing Director for GATI KWE, and Mr. Rohan Mittal, CFO and Chief Transformation Officer for GATI, and SGA, our Investor Relation Advisors on the call today. I trust all of you and your dear ones are doing good and keeping safe. I hope you have had a chance to look at our results and the results presentation, which has been uploaded on the stock exchanges and company website. To begin, I would request my colleague Bala to give details about the business. Over to you, Bala.
Thank you, Ravi. Hi, good evening all. We are having this call after a gap of more than a year. I remember the last time it was, I think, Q2 of the last financial year. So it has been more than a year since the last time we had this call. It is all the more important that we spend time on this call today to help you understand what we have been up to as a company over the last many months. The way we shall do this, I shall give you an overview of the broad direction and the thinking, and our CFO, Mr. Rohan Mittal, will take you through the numbers. You can, of course, clarify your understanding post we complete our commentary. So let me start with a highlight commentary. First and foremost, the investor transition is now complete. GATI is now a proud and happy family member of the All Cargo group, with All Cargo having acquired near 47% stake in the mother GATI company. The merger or acquisition, so to speak, is now complete. We have a totally new board with many accomplished men and a lady as our new directors on the board, led by Sir Shetty as the chairman of the board. It is indeed noteworthy that our joint venture partner, Kintetsu World Express, has been in full support through this entire transition. KWE continues to hold 30% shareholding in the GKEPL subsidiary, which was the same in the past as well, right? Thus, in some ways, GATI is become the melting pot of logistics excellence, led by All Cargo at the parent company level and closely supported by KWE at the subsidiary level. In this context, I am wanting to say that GATI now stands before the corporate landscape with this newfound confidence, backed by twin logistics giants All Cargo, with KWE continuing to support in the subsidiary. So that was at the shareholding level and the board level. At the management, the most important point to note is that this transition has happened without any attrition at the top. The management team is intact. Of the top 100 managers in GATI, we have retained nearby, with hardly 5 people either moving on or being let go. So the management team, the management talent foundation remains intact. Not only does the management foundation remain intact, this is now further augmented with the best of talent from All Cargo moving in and working closely on GATI with GATI. In this context, I would also like to mention the onboarding of our new chairman and managing director in the subsidiary, the GKE subsidiary, Mr. Adarsh Hegde, whom of course all of you would know is also the joint managing director on All Cargo. I'd like to mention our new CFO, Rohan Mittal, who is on this call. Both Mr. Hegde and Mr. Mittal have joined the management team of GATI. This is a very big infusion into GATI at a senior management level. In addition, many other cross-functional leaders from All Cargo are very, very closely engaged through the newly formed centers of excellence that we have done between the companies, so that we are kind of getting the best practices being rolled into GATI in every function, whether it is audit, legal, procurement, IT, etc., etc. To sum up, the transition shareholder, board level, management level has been handled extremely well, and the company is now settled down into a very different future, and that is what we are collectively working towards. To share a little bit of what activities the company has been up to in the last few months, let me start with first saying the character of management team of the company is in full display as it simultaneously managed two significant once-in-a-lifetime events. One, of course, is the once-in-a-lifetime shareholder transition, and this coinciding with the challenge, the once-in-a-lifetime pandemic situation. So there were two very, very big once-in-a-lifetime events happening simultaneously, and the team did really well to make and execute many big decisions from a long-term perspective, even as we kind of went through these mega changes in the company. The company is now sharply focused on the core express distribution business, and we have unhesitatingly let go of many non-core business verticals. As examples, I would like to share, we have walked out of freight forwarding in entirety. We have let go of the China subsidiary. You will remember that we used to have a presence in China in the past. We have let go of the subsidiary. We are in the process of exiting from the inventory trading business within another subsidiary that we used to call as GITL. Yeah? So there are very big changes that we have actually decided at a business portfolio level, letting go of the China subsidiary, the GITL subsidiary, etc., walking out of freight forwarding and so on. We have also sharply moved out of non-profitable contracts, be it in e-commerce or even in handful of B2B clients. So we have been sharply focused on which contracts give the required profitability to GATI's business. That's very, very sharply focused on growing a profitable core. In addition to these business portfolio changes that I just outlined, we have done many other changes within the organization as well. We let go, believe it or not, of near 1,000+ headcount from our roles within 2020. You probably would have spotted the impact of this in our reported financials, wherein the employee costs have dropped dramatically. So a very, very big move on that front. Similarly, we have also moved to control our fixed overhead so that we don't get mortally hurt because of the pandemic blow on the economy at large and, of course, to our own business. With all these changes, we now are present in the market with renewed confidence and a new sense of purpose. Within Q2, our monthly business crossed the 100% mark over last year, and the truck utilizations have improved quite significantly from our historical past. The fixed overheads have been ruthlessly slashed, like what I explained, whether it is people or admin overheads, etc. Thus, the overall business profitability stands improved for all times to come in future. Finally, I would also like to mention that with all this work happening, we have also embarked on an accelerated business transformation journey. We did announce it when we were getting into it, with help from Alvarez and Marcel, about which Rohan will speak a lot more in detail. So please just hold until Rohan comes onto the call. To sum up, you have all known GATI for many years, but I want to reiterate that GATI is now here in a new avatar in the logistics market. We were, of course, pioneers in our first innings. We went through some interim issues, but those issues are summarily behind us, and we are here back in full form in a second innings in a new avatar. We are confident and hopeful of building from strength to strength here on. You will see that in the numbers, you will see that in the commentary, you will see that in the way we come across to investors, to customers, and every other stakeholder in the market. So with that, thank you. I hand it over back to Ravi, please.
Yeah, thank you, Bala. And I would like to add to that from All Cargo's perspective, GATI is a proud member of Avasya family, and we believe there will be strong synergies, and we have already been experiencing, like Bala touched upon some of these areas, wherein our teams have already started collaborating. All Cargo has been a market leader in the global LCL consolidation with our own offices across the world. And now with GATI added to the portfolio, we effectively have a capability to cover the entire world on the EXIM logistics side and almost every pin code in the country. This provides us with an unmatched competence of delivering door-to-door shipments. Add to that the synergies across other businesses like CFS, contract logistics. We believe that addition of GATI to All Cargo group of companies would benefit both GATI and the All Cargo companies. It has been an absolute pleasant surprise how we have been able to navigate the COVID challenges, thanks to an absolutely able management team led by Bala, which has allowed not only business to prosper, but like he mentioned, for a very, very important transition to take place in an absolutely effective manner over the last 6 months. So things have been extremely good so far, and we believe that as we move forward with this newfound partnership, we should be able to see good times ahead for GATI. In this context, we have taken up this transformation project, which Bala spoke about as well. I would now request my colleague Rohan to talk a bit more on the transformation project and also to take us through the numbers. Over to you, Rohan.
Hi, thanks Ravi, thanks Bala. Hi, good evening to everybody who's joined on this call. I hope I'm audible. So basically, Bala has already touched upon what exactly we are trying to do in the transformation program. Let me explain that furthermore. So basically what we are trying to do in this transformation program is unleash the true potential of GATI and its subsidiaries by reinvigorating the team, reinvigorating our digital capabilities and the infrastructure. There are multiple initiatives, almost 200 plus initiatives that have been identified. The program duration is about 15 months. We are about in the 4th month of this program, and the outcome is already visible to all of us in the form of Q2 results also to a great extent. Some of the things that we are working on, for example, are we are going in for a complete digital overhaul of the way we do business. I'll give a very simple example. Something that has just gone live on our network is a WhatsApp-based chatbot program that's called Jenny. And this program is supposed to provide real-time details about customer queries to the customer. This is something which is almost first of its kind in the kind of sector that we are operating in today. This is just an example of some of the digital overhauls that we are doing. As we speak, we are trying to bring in a new CRM. We are trying to launch a new finance ERP. So there's a complete digital overhaul that is happening. Simultaneously, what we are also doing is we are relooking at our network and infrastructure capabilities because of the volumes that we are already started to handle. So what we are trying to do is we've identified some of our key hub locations, and we are now looking for bigger and better facilities to replace those locations. This will not only help us make the entire network more efficient, but we'll also be able to increase the supply from our side in terms of the handling capacity, in terms of the transshipment or throughput capacity. Amongst other things, on the finance side, for example, what we've undertaken is one of the mandates that we've picked up is that we have to reduce debt, significantly reduce debt. And again, the outcome of that is visible. In Q2, we've reduced debt by almost 70 crores at a gross level, right? Some of the other initiatives that we've also picked up is monetizing non-core assets. So as pre-acquisition, when we were discussing with the management of GATI, we had identified certain assets which the management felt are non-core to the business. So it was very important to sell these assets and use the proceeds to again retire whatever liabilities are there. In addition, what we've also done is we've taken advantage of the tax amnesty scheme which was launched by the government of India. And through that, basically what we are trying to achieve is that about 135 crores of contingent liabilities, which were mostly tax related, would be down to almost 27 crores by taking advantage of that tax amnesty scheme. So these are some of the initiatives that we've already picked up, rolled out. The program, as I said, has another 11 months to go. The broad outcome of this program will be that we would have regained some of the lost profitability. We would firmly back in the driver's seat as far as market leadership is concerned, share of wallet is concerned, as well as the foundation for the digital Gati would have been firmly laid in place. So these are some of the outcomes that we expect. I will now take you through the brief overview of the consolidated results for the quarter and a half year ended 30th September 2020. Revenues for the second quarter of FY21 was about 345.3 crores as compared to 441 crores for the same period last year, down by about 20%. Some part of this reduction from last year is also because of the conscious calls that we've taken of exiting certain businesses that Bala mentioned earlier. On a quarter-on-quarter basis, revenues were up by about 104%. If you look at the split of this business, 81% of the business came from our core express supply chain business. Gross margin stood at about 24.8% for the second quarter FY21 as compared to 22.2% in the same period FY20. This is an increase of about 260 basis points. Again, one of the most important reasons for this would be the better utilization that Bala just spoke about a little earlier. Our EBITDA for the quarter stood at about 23 crore rupees compared to 19 crores in Q2 FY20. This is a jump of almost 21% on a Y-on-Y basis. Before exceptional items, we've registered a profit before tax of about 1.9 crores as compared to a loss of about 8.6 crores in the same period last year. On a sequential basis, over the last 3 quarters, we've seen our performance improve substantially. As far as the gross debt is concerned, we are today at about 330 crores of gross debt. We're down by 70 crores, which we've repaid from the proceeds of the preferential issue that was done as part of the All Cargo acquisition. So we've utilized the money to reduce debt from the books of Gati. And we will continue to, as I said earlier, monetize assets and keep reducing debt. On the cash flow front, our cash flow from operating activities has improved significantly compared to last year. For the half year ended 30th September, our net cash flow from operations was about 40 crores compared to 20 crores for the same period last year. With this, I would like to hand over back to Ravi for any further comments. Ravi, over to you.
Thanks, Rohan, for taking us through the financials. With this, we conclude our presentation. Now the floor is open for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Ashwini Agarwal from Ashmore Investments. Please go ahead.
Hi, Ravi, Bala, Rohan. Great job. Congratulations. Could you just help me understand, how should we look at the Q2 or the first half revenue across the, major business areas, such as Express, SCM, and then you have, of course, the cold chain and some of the other smaller businesses. Could you give a division-wise split, please?
Yeah, I'll request my colleague Bala to throw some light on that.
Right. So within Q2, of course, life, Ashwini, moved month on month quite dramatically. Okay, so Q1 was a lot of that lockdown and stuff. Q2, July started with the lockdown being nationally lifted, and thereafter there was a slew of local lockdowns imposed by the state government. So that was July month. Thereafter came August and September, right? So month on month, dramatic changes happened. I must say, in July, August, we had, in general, I'm not talking at a totality level, I'll come to the division. We were not at 100% of the previous year. We were, let us say, between 85 to 90%. In September, we crossed the 100% mark, which is what I was referring to, saying in Q2 we crossed our last year number. Okay, so July, August, approximately take it 80, 85, 90% in that range, business by business, and in September we crossed the 100% mark. In all this, the express business is what ramped up quite sharply. The warehousing business was approximately the same 100% all through the 3 months. The reason being, warehousing does not change, right? The ramp up happened in express. Warehouse was kind of similar all 3 months. The cold chain business actually had a degrowth, and the reason for that, because the ice cream business was completely hurt in this period, and a lot of the cold store, both capacity in the store and of course the primary reefer transportation and secondary reefer transportation, there was surplus capacity, not as much demand, because a significant demand sucker was actually not there in the form of ice cream and so on. So Kausar alone was a shade lower. Express ramped up through the quarter. Warehousing maintained a steady state of 100% right through.
Okay. And the other question is that, you mentioned that, some of the businesses you've already closed down. You mentioned 2 of them, but from what I recollect, the cold chain is also one business that you're looking to significantly restructure or reposition or exit, as the case may be. So what else is remaining to be shuttered, sold, or restructured? So what I understand, the core business of Express and supply chain management, and then of course, the warehousing business will continue, but cold chain will go away. Is there anything else that's left that needs to be closed or something?
Okay. I would like to come in. I would like to come in here. As you mentioned on some of the earlier calls on All Cargo earnings call as well, we are evaluating some of the businesses. There is no firm decision or direction on the cold chain business as yet. We continue to evaluate all the businesses. Express is certainly the heart of Gati, and some of the non-core businesses, which would certainly we look at opportunity to divest, would be businesses like fuel stations, which are there. I would request my colleague Bala to add further to that.
Actually, in some ways it is covered, Ashwini, in Ravi's response. Yeah, we are of course looking at our businesses. What was an obvious thing to do, we have done. The other parts of the business, as they remain, they remain. We always look for value and so on. So I'm saying I would put it that way. Right now, our focus is on the road business. The road business for us is Surface Express, and there is a PTL business linked to that, and the higher weight segment e-commerce also travel from road. So these, along with the 2 other things, which is your warehousing and air, these are core businesses of Gati. Cold chain continues to remain in our portfolio. It's not like we have taken any call on cold chain. I don't know where you got that impression. Cold chain continues to remain in our portfolio.
Okay. Thank you, sir. I'll come back for more questions.
Sure.
Thank you very much. Next question is from the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi, sir. Thank you for taking my questions, and thanks for a detailed presentation and keeping this call very helpful. So my question is, if you can give more color about the supply chain business, what kind of industry-wise split you have in this business? And also, I understand that you also have Avasya CCI business, right? That is more focused towards the chemical warehousing and all. So do you plan to merge these two businesses to gain any synergies out of that?
Yeah. So Bala, would like to answer that?
Yeah. So on the warehousing business within GATI, our big clientele base is of two different industry segments. One is auto, the second is electronics. Yeah. So these are the two things where we are present in GATI. The reference to ACCI, of course, ACCI has a much bigger business than what is there in our GATI Kintetsu Express warehousing. ACCI business is much bigger. It is quite focused on chemicals and fulfillment centers and e-commerce. So those businesses continue to remain in the individual verticals as they exist today. There is no immediate comments to give on any merger, etc. That is not what it is. They continue to remain in their respective entities as they are today.
Understood. Sir, your supply chain business, by supply chain, you mean only warehousing activities, or you also include transportation within this category?
Actually, by supply chain, we mean only pure warehousing. We have a lot of distribution linked to the supply chain to these warehouses that gets accounted within our express business itself, because the shipments get handed over to the hub and spoke network thereon. So when we say supply chain, we mean only warehousing. Other associated parts are accounted in our express business.
Understood. And sir, you also have two different segments, right? Express and e-com logistics in your presentation. So just want to understand if e-com logistics is also part of the GATI KWE subsidiary.
No, let me clarify this. GATI KWE subsidiary is the B2B vertical. So all express, whether surface express, air express, or even warehousing, these three are part of the GATI KWE subsidiary. The e-commerce business is actually in our mother company, GATI company. That is where the e-commerce distribution lies. Although there is a line haul service which the GKE B2B business provides to GATI. But the business itself resides in the parent company. The e-com business is part of GATI Limited and not part of the subsidiary.
Understood. And lastly, sir, do you give the last 5-year CAGR numbers? So obviously, your numbers are pretty flattish as when you compare to the listed and the unlisted peers who have scaled up significantly over the last 5 years. So one of the things that you will change, you talked about, is the hub and spoke model optimization. So just want to understand, are you in talks with the clients that you might have lost in the past 5 years? Will they be okay to come back now, or you will target new clientele to gain the market share?
So let me first share, the customer confidence in GATI has always been high. It continues to be very high. As part of the transformation journey that both Rohan spoke about, I mentioned and Ravi mentioned, we have actively focused on expanding our presence in the market. This is both about market share with existing customers. It is also about onboarding new customers, regaining lost customers. So the entire portfolio of it is actually part of this scope. And we are very confident because the GATI brand name remains solid in the minds of customers across the landscape.
Great, sir. Thank you for answering my questions. All the best.
Thank you.
Thank you very much. Next question is from the line of Anuj Jain from Globe Capital. Please go ahead.
Yeah, good evening, everyone. Thanks for taking my question. Sir, I want to know one. There are two questions which I want to understand. First of all, what are the sustainable margins on which we would like to work in the future? EBITDA margins and then the profit margin.
Sorry, Anand, I missed the question. If someone can repeat it. Is there a sustainable what?
Sustainable margin, sustainable business margin on which we would like to work.
Okay. Let me help answer that. There is definite potential at an EBITDA level for the margin, gold standard margin to be around 12%. Yeah. As you are aware, in the past, GATI, GKE, we have been reporting over the last 2-3 years in the range of 6 to 7% kind of EBITDA. We were way below the market and the competition. Without going into reasons about the past, suffice to say, we have every intention and we are working on it as part of the transformation to kind of move quickly into double digits and target the gold standard. Okay. I won't put a time frame to it, but without any doubt, these are established benchmarks, and that is our aspiration, that is our effort.
Okay. And second, as we are into this cold storage and supply chain business, and now everyone is talking about the COVID vaccine and cold storage business. So are we in that? Are we thinking in that line also that we'll participate in that business opportunity whenever it comes? Are we into that?
Anand, you're absolutely right. There is a lot of talk in the industry about vaccine logistics. We have reached out to the relevant stakeholders, whether it is in the government, whether it is in the vaccine manufacturer nature. Yeah. So we have reached out and we are working actively. Everything depends on finally is the vaccine cold stored vaccine or an ambient travel vaccine, etc. There are different possibilities. I think a definitive statement on this can be made only as time progresses, but suffice to say we are actively engaged in exploring the opportunity.
Okay. And because I was just listening to the Snowman company's interview just today only, and they were saying that for this vaccine we need minus 70-degree temperature kind of facilities, and India no one has such kind of facilities. So can you please throw some light on those?
So if I may add on to this, there are multiple vaccines which are under trial across the world. There are some of them, including one, if I recall correctly, from Moderna in US, which requires an extreme low temperature, but most of the vaccines under development are well within the range of minus 20 degrees or higher temperatures. As we all know, there aren't any firm outcomes as to which vaccine would eventually be successful and require transportation. So as Bala said, it is difficult, but most vaccines, in terms of number of vaccines out of total trials being conducted, most of them are in minus 20 degrees or higher range. Some of them are indeed in those minus 60 or lower numbers as well. And if those vaccines were to be transported, there would be significant challenges, as the Indian cold chain supply chain is not really truly capable to handle those kind of temperatures. There could be serious challenges, but we would like to believe that there's a greater chance of vaccine logistics requiring minus 20 degrees or higher temperature.
Right.
And if it is in the minus 20 degrees range, Gati Kauser, our cold chain R, is what is suitably placed. If it is even warmer than that, there are other ways to do it, which I'm saying even the ambient Gati Kintetsu can actually look at. So depending on the vaccine, we have covered most of the space, except maybe the one vaccine which Ravi called out.
Okay. And one last question. Whenever we look at the results, so there are many notes, footnotes in terms of that some money has to be received from the existing aspiring promoters, Mr. Agarwal. And, there are so many things. It looks, as if there are so many litigations or receivables and which you have not taken into the P&L. So when can we have that cleanup kind of, exact clean results, or you can say balance sheet, where we know exact that now there is nothing, and nothing in terms of receivables or any litigation or any sort of thing. So, are we working on that line also?
Of course. Rohan, you want to speak on that? You want me to speak?
Sure. So, Anand, see, basically, these were elements that would have been known, right, and would have been discussed during diligence phase. We are actively working with the erstwhile promoters to mitigate some of these issues. Some of them have also happened. So I'll give you, for example, over here, there was an excess remuneration that was to be recovered from the earlier managing director, and for FY17-18, that entire amount has been deposited by the managing director with GKE, right? So all those elements are happening, but see, COVID has been terrible for everybody, right? There's nobody really immune to that. So there are some relaxations, temporary relaxations that may have happened because of that, but rest be assured that the entire management and the board, I would specifically like to call out the board over here, is firmly behind closing this cleanup as you labeled it. We expect that in the next few quarters, we should be able to bring this to a closure.
Okay, sir. Okay. That's it from my side, and wish you... Yes, please, sir, you were saying something.
I hope I've answered your question, Anand.
Yeah, absolutely, sir, and wish you all the very best.
Thank you.
Fine.
Thank you very much. Next question is from the line of Ankit Panchmatia from B&K Securities. Please go ahead.
Hi, sir. Good evening. Feels good after a long time listening to Bala, sir. Some questions from my end, sir. I am eagerly looking out for our FY20 annual report. I think it's not yet filed, so I'm just looking out for that. So some of the key data points which I need from your end. What is the current warehousing space under management for us?
Okay, so let me just give you a sense of the size of the business.
Yes, sir.
Within the overall business that we have, warehousing is actually a smaller portion of the business.
Okay.
It will be of the size of around 65-75 crore, in that range per annum.
Okay.
I'm saying that is the size of the business. That is what we report in our section-wise reporting. Yeah. So it is of that size.
Right.
It is a modest business. We are looking to invest in it. But like I said, the bigger focus right now is actually on express and everything else. Along with that, we are looking at integrated solutions as relevant to our customer base. So integrated solutions in that space, warehousing falls very squarely in between. So it is there, very much there. It continues to give us significant weight in the market.
Right. Sir, just to mean, sir, I was looking out for what million square feet we are currently managing, if I can get this number.
I can share that with you separately, Ankit. I'm not
it would be okay, no problem.
sharing it right.
E-commerce, if I recollect right, it was one of the fastest growing segment within GATI, and we were keenly focused in our earlier avatar into it. Now in the new avatar, how are we approaching this business? Because again, it has come into a flavor. It is again ramping up faster. How are we looking at this business within GATI? And what are the what do you feel? What are the prospects for this business going ahead?
Okay, so let me try and address that, Ankit. So in the past, we had a significant e-commerce business that was across weight segments. Okay.
True.
If you remember, GATI originally started with what I would like to call as category C weight segment, which was the white goods and so on.
Right.
Thereafter, we actually expanded ourselves into the smaller weight segments, the medium weight, and then the smaller weight as well. And we actually, as we expanded, we felt the pressure on profits, and the pricing pressure in the market was so huge, we were not able to push that. If you recall our results last year, and I think the Q2 call last year, I explained the reason for the performance of last year was that we expanded the e-commerce business, especially to the smaller weight segments. Now, if you look at what we published in Q2, on a much smaller base of e-commerce, we are actually having head above water. Yeah. So we have controlled ourselves to participate only in the category C. We have kind of withdrawn to some extent from the category A, the really small ones.
Right.
Having said that, I must also tell you, we are actively engaged on refreshing our e-commerce strategy. We are thinking through what ways exist for us to participate in a sustainable manner. Yeah, it can't be that 1 year it works and the second year it does not work. So we are evaluating as part of the transformation journey how to participate in e-commerce once again in a sustainable manner for all times to come.
True. Sir, if I remember it right, it used to clock a quarterly run rate of 65 crores. How early you feel you would be able to clock those numbers, or any rough targets from your end, 2 years, 1 year down the line? Because we are seeing lots of buzz around this e-commerce sales season has been happening. Just a rough your internal estimates, if you can share regarding this business.
So Ankit, I really don't want to hazard a guess. This is work in progress. We had a certain thinking in the past. We tried year on year many different things.
Mm-hmm.
I think that was all right to do it at that time. Right now we are saying, how do you build a foundation which can grow by itself and not do a yo-yo year after year? You are right. At one time, I think about 2 years back or just before that, we had a 200 crore e-com business. That business itself came down sharply even in the course of last year. And now we have made our choice because we didn't want to hurt ourselves as a business. Okay, we have made that choice and we are reworking for the future. As we get more clarity, happy to share with you. Right now, I think this is a pause button in that sense. Except that we are very strongly present in the category C, white goods, or whatever is the outsourced volume of category C from the major players, we will still be a significant presence there.
Right. And so one more data point. Within Express, if I can get how much is ground and how much is air? If air, I believe, would be much more smaller, but then to any rough...
Yeah, air is a much smaller one. Even generally, air used to be small. Okay, so I'm saying when Rohan talked about 80% being in the GKE vertical, within that 80%, less than 5% will actually be air. This was small before, but it is right now because we are now getting back into the air thing. As you know, the airlines are only now kind of normalizing operations. So don't make an assessment based on what it is today. We are very strongly committed to Air Express as a business vertical because we have a huge clientele of customers who are actually contracted with us on surface. And each of them has a requirement of something needing to be shipped urgently by air. Yeah. So we are very clear that we will piggyback the air business on the surface. And as a result, we are looking for growth in the air business. Right now, to answer your question, it will be about 5%.
Right. Sir, last one from my side, if I can. Sir, how do you feel Gati, being an express player, is able to mine all cargo clients, or which categories you believe wherein Gati would be able to build synergies with all cargo? Your take on this?
There are 2, 3, 4, 5 ways. Yeah, we have already called out the various synergy segments.
Mm-hmm.
One is there are global multinationals, okay, who are actually moving from all over the globe into India. They are big companies, big customers of Alcargo. The thinking around that client base is to be able to offer end-to-end, to the door in India. Can we give one price? And this only Alcargo Gati uniquely can give. No one else can give a door-to-door price from anywhere in the world to India. Only Alcargo Gati can give, right? So this is one model. The other models that we are looking at, because Alcargo has many CFS and ICD presence across within India itself, we are actually looking at that portfolio of customers whose wares either come into these CFSs from outside or getting consolidated from within India to go outside. We are looking at those streams also as potential business streams for us. There is, of course, many other ways of collaborating. As an example, cross-border e-commerce is another very, very big interest area. Although right now, China, India, I'm saying only so much that is happening. But in general, we are seeing that cross-border e-commerce is now going to expand beyond China to India lane, to other countries to India lane. So that is something that we are beginning to see. And even in that, it will be a combined all cargo Gati kind of a single product, door-to-door kind of stuff. So I think we are uniquely positioned, both with global presence as well as domestic reach.
Great, sir. Great. That's all from my side, sir. Would look forward to continue interacting. Thank you.
Thank you.
Thank you very much. Next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Yeah, good evening, everyone, and congrats for great improvement in results and turnaround which we are looking at. I have a few questions. Firstly, so can we get data on how much business in terms of revenue we would be foregoing by getting out of XYZ businesses which we talked about, like China subsidiary, freight forwarding, and inventory trading business?
Okay.
And were all these businesses loss-making, or how much loss could get trimmed at EBITDA level because of all these segments?
Okay. So let me take that. I called out 3 businesses. One was Gati China. Second was the GITL subsidiary. Third was the freight forwarding. The sum total between these 3 is somewhere between 200 to 250 crores. First statement, none of them was profit making. Yeah, the Gati China was a loss-making venture for us. Our freight forwarding was just about neutral, meaning head above water kind of situation, not giving us any joy in the bottom line. It was accruing top line, but nothing in the bottom line. Similarly, the GITL accruing top line, nothing in the bottom line. So it's not just about the loss. It is also about wasted management bandwidth in things which are non-core and which don't add value to the investor. So that's the nature of these businesses. Top line impact, approximate 200 CR, but it is almost all factored in. I'm saying you have seen that between Q4, Q1, Q2, we have already seen 3 quarters of this going down. So in some ways, it's not a new thing that you will see.
Sure. And sir, we used to share some data on segmental information on e-commerce, Gati, KWE, and freight forwarding. Anyway, we are now out. So can we get that? Okay, how is the like out of total 340 crore revenue? How much is Gati KWE revenue for quarter or first half, whatever is available, and then what is e-commerce revenues and cost revenues in total consolidated numbers?
Rohan, you want to take that?
Hi, Prateek, would you want the Q1 quarterly numbers or the H1 numbers? Which one are you looking for?
H1 is also okay. The best thing would be both quarters, but H1 is also okay.
So GKEPL, I can tell you the numbers. GKEPL, as far as quarter 2 is concerned, was about 262 crores. Quarter 1 was about 112 crores. Yeah. And last year, Q2 was about 305 crores. Okay?
Okay.
You want the Cosser numbers also?
Cosser and e-commerce number as well?
So we are not disclosing e-commerce numbers as a segment result, but I can shed some light on that. Before that, Cosser was about 8.34 crores in Q2 FY21, 6.5 crores in Q1 FY21, and 105 crores in Q2 FY20.
Sorry, 10.4.
10.5. My bad. 10.5 crores in Q2 FY20. As far as the e-com business is concerned, as Bala explained, there was a dial down in Q1 and Q2 was also a calibrated regrowth, because we wanted to be very, very certain that whatever business we are doing has to be value accretive, has to be profitable. Because of that, Q1 and Q2 put together would be about 10 odd crores in top line, 10 to 12 crores in top line, in e-com specifically.
Okay. We used to do around, I think, 25-30 crore or quarterly run rate of revenue. So annually, the amount of trim down which we
Annually, we used to do about 120 crores in e-com prior. Obviously, there would be a disproportionate income in the festive seasons. So at an annual level, you can then maybe compare the numbers.
Okay. And would we have, like we mentioned that we participate in category C movement, which is like high with category, which would have, I'm sure, seen very large movements during this festive sale, which grew like 50% year on year.
Yeah.
So would we have benefited out of that October sale?
No, so October and November, we are seeing good traction in the e-com business. It's a multiple of our September number. But at this point of time, Pratik, we're not at a liberty to disclose those numbers because we've not filed the October-November numbers. But suffice to say that it's a multiple of our September number, actually. We are seeing good traction in the numbers in October and November.
Right. And just one question on fuel stations. We are also looking to exit this position also, fuel stations, which we also have like in standalone business.
So fuel stations continue to be profitable. They'll generate about 4.5 to 5 crores in annual EBITDA. And they're not consuming any working capital, etc. As of now. So they continue to be value accretive. However, it is a non-core asset. And therefore, if we are able to find a buyer at the right price, etc., we will be open to exiting the fuel pumps business. It was acquired for a strategic reason way back in 80s, 90s. But now the way obviously the fuel policy, etc. has moved, there's no requirement to own fuel pumps for a transport company, for a logistics company.
And there are any related party transactions between All Cargo and Gati, or they are, I mean, going forward, I mean, in terms of arm's length transactions, or these are exclusive businesses, maybe just sharing clients with each other?
If at all clients are shared, the invoices will always be separate. We are not envisaging any composite pricing at this point of time. So therefore, I don't see any potential RPTs. As of now, there are no RPTs on client level basis. There will continue to be some RPTs which are all under ordinary course of business like management fee, etc., which will be run through a proper process because we have minority shareholders also. So we'll be very, very diligent about the corporate governance standards in terms of bringing in RPTs. But at a client level, we are not seeing any RPTs now or in the near future.
Thanks and all the best with the team.
Thanks, Pratik.
Thank you very much. Next question is from the line of Ashwini Agarwal from Ashmo Investment. Please go ahead.
Thanks for the follow-up. The previous question related to the revenue numbers of the breakdown of the express distribution and supply chain on the segment basis. So the numbers that you presented in the consolidated, especially when you look at the segment results, those would be all before minority interest. Am I right?
That's right.
Okay. And how much would be the loss of Gati Kausar in that segment profit and loss that you reported of 12 crores PBT in express distribution and supply chain?
You're referring to the H1, not the Q2 numbers.
No, Q2, no. So Q2, if I look at segment results, profit and loss before tax and interest, express distribution and supply chain is 1202, which is 12.02 crores.
Correct. So, go on.
So how much is Gati Kausar out of that?
So I can share the Q2 numbers and Q1 numbers for Gati Kausar again, if that helps. As far as profitability is concerned, at a PBT level, Kausar remains negative because of the legacy debt that is saddled on the company. There's about 90 crores of debt on Gati Kausar. Almost entirely is owed to one of the shareholders, which is Mandala Capital. Right. So because of that, PBT remains negative. EBITDA-wise, we are working even as far as Kausar is concerned, both Q1 and Q2.
Okay. No, that's very helpful. Another question I had was that on the fuel pump business side, I mean, this is a little complicated, isn't it? Because what I'm given to understand is that these are contracts effectively, with the oil marketing companies, and usually they are not transferable. So is it possible to sell them, or you'll have to just continue with them because it's not possible to transfer these contracts?
No, sir. It's possible with the permission of the OMCs. It's possible to actually sell these pumps as well.
And have you approached them and they've agreed to it or something?
So at this point of time, we've not approached them because there has to be a buyer in the market first. There's no point in approaching the OMCs if there's no buyer. Our first intent was to stabilize the businesses wherever required. So keeping that in mind, we've not even started looking for a buyer right now. So to give you an example, we are changing the ERP that is being used, the system that is used to run the pumps. They were relying on a very archaic system. So we are stabilizing the business still. As I said, it continues to earn profit for on a standalone basis. So if there is an attractive offer, we will obviously sell it because it's a non-core asset. We've not approached the OMCs yet, but the contracts have been studied. They clearly stipulate that in case we wish to transfer the contract to another party, we have to take prior permission of OMCs.
Perfect. So coming back to the core, express distribution and supply chain business, I mean, could you help us understand what is the client concentration like? What are typically debtor days in this business, and how much should be the standardized, cost of receivables in the sense bad debt incidents, etc.?
Bala, would you like to take the first part?
Yeah. So there is actually near zero concentration of business and express distribution. Okay. What we operate with, just to give you a sense of the customer franchise, we will have near 3,000 key enterprise accounts and SME accounts, near 3,000 of them. In addition, we also have a significant cash and carry business that will have about 15,000 people, right? Meaning they're all the small-time traders in various cluster markets, etc. So I want to categorically say there is zero concentration of business. It is our endeavor to grow that franchise, both the count of customers who are there in the franchise and the contribution from each member in that franchise. So both efforts are ongoing right now.
Okay. And receivable days and bad debt incidents at all?
Let me put it this way. I think we are absolutely under control in the way this is panning out. At an overall receivable level, if you compare where we are today versus where we were, let us say, 1 year back, if anything, we will be a shade lower in terms of overall receivable. In the beginning of Q1 through Q1, we had a lot of worry around that, but we worked hard within the course of Q2. I think much of those worries are vaporized. Firstly, the larger customers, the key enterprise accounts, etc., they have actually turned back in a very positive manner. Their businesses have come back in reasonable full strength. There is a small segment of SME which is well known across the country, which is kind of holding a little bit of stress. It is not unique to us in any manner. I'm talking about the country as a whole. There is an SME stress, right? But I want to give a clarity and assurance. We are absolutely on top of it. We are in control, both in terms of any risk on that front. We have been proactively working to mitigate that risk. Q1, if you asked me the same question, I would have said yes. Q2, I will say we are not out of it completely, but we are super confident that we are in control. That's the way I would summarize.
And generally speaking, this business doesn't generate bad debts, or I mean, what would that? It's a nominal number, or it doesn't really happen?
No, we actually are governed by a very strict objective policy. Okay, when it comes to the bad debt, etc., we are ECLM provision, estimated credit loss mechanism, whatever is that India's terminology that is used. We are governed by a very strict formula-based policy. So what you see reflected in our results is something which has been used over the last 3 years. Nothing has changed in the formula in that sense at all. So we are absolutely well covered in every which manner, and more than what I'm saying about the ECLM being formula driven, I am even more confident because we have seen a dramatic improvement between Q1 Q2. I think 85-90% of the problem is kind of gone away. The last 10%, of course, there's no sanctity to the number that I'm saying. Yeah, the last 10% is something that we are working upon, and I'm reasonably confident that I think that is also in our control. You will see that. You will see the impact of that within the coming quarter and the quarter after, because we are seeing a very solid spring back, even in SMEs. As let us say September, October, the SMEs have been springing back. They were not doing so much in the Q1. They were completely dormant. In Q2, July, August, I'm saying halfway through, but September, October, spring back is obvious and evident. There is no doubt about it.
Perfect. Thank you so much, sir. Thank you for answering my question.
Thank you.
Thank you very much. Next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yes, thanks for taking my question. My questions are mostly on the express logistics business. So, do you think that you can share some trends on volumes, prices that you are seeing in the market? Also, if you can share the number of branches that you have at present and the employees, that you employ for the express logistics business particularly, or is it purely a franchise-based model? And also a breakup of in terms of sectoral mix as far as customers is concerned. I think these were the questions I had. Thank you.
Okay. Just to give you a sense of the network, we will have operating units in 700 plus locations. This is a combination of small units, medium-sized units, what we call as mini hubs, etc., and then the larger hubs which are used for transshipment, right? So in all, about 700 odd operating units on the ground, covering 19,500 plus PIN codes. It is only a rare district here and a rare district there, which will be especially in areas like Northeast or I think in Kashmir kind of place. Hardly 2-3 districts we may not actually be reaching. Otherwise, every district in the country is reached by us. Okay, we operate through a combination of own and franchisee-based model. So in our network, a substantial portion is actually owned. There is also significant contribution from franchisee, but a substantial portion is actually owned. The business generation is through own effort. The service providing and the reach is also managed through the franchisee, not so much the business itself. That's the way we are organized across the country. Did I miss any question? There was a last question that you asked, which I'm missing.
Yeah, also, I mean, of the branches which you're operating, you're owning and operating, what is the kind of employee allocation?
Employee strength, okay. On our rolls, we have about, let's say, between 4,200 employees. Not everyone is an express alone, although substantial portion is express. This includes people in the warehouse. This includes people in counter, etc., etc. So the total strength you can take between 4,000 and 4,500.
Okay, and revenue allocation is not happening with franchising, or you can mention that this percentage of revenue is on account of franchising and this percentage is on account of own.
Yeah,
that kind of.
Yeah. Actually, we have used the franchisees more as a reach model for us. Yeah, and of course they do bring in some revenue in the form of cash and carry business. The large portion of the credit business, which is contract signed with large customers or SME customers, is done by our own sales team.
Okay, got it. And also, some indication on the tonnage movement, the percentage change that you are seeing, the realization change that you are seeing on a YOY basis. I mean, any sort of indication that you would like to share? in this particular segment?
Yeah, without getting into absolute numbers, let me just give a sense of it. So I'm saying between July, August, September we reached more than 100% on a Y-on-Y basis, okay, in terms of tonnage. That number has been accelerating going forward. So we see a very, very buoyant economy as of now. In fact, I'm saying the way we see the things around, if the economy sustains in November, December, I think then everything about the pandemic is behind us and things life will move on into a very positive trajectory.
Right. And, first half volume decline, in the first quarter and the second quarter, would be similar to what we have seen for your peers? Is that a right way of looking at it, or how to sort of,
that is a fair way of looking at it. Of course, the industry does not operate with any neutral body publishing numbers, right? So it is our guess versus somebody else's guess, yeah. And there is no publisher of accurate information there. I do believe that the spring back to life within Q2, we would have matched the best in the industry. In Q2, I believe we have gained share from the players below us. Okay, I believe we have gained share from the players below us in Q2. So the industry, in some ways, I think we have kept pace to some extent, trying to get a step ahead, and we want to do more of it.
Right. Thank you. And last question was, any sector-wise breakup of your volumes that you maintain or you can share? Which sectors are contributing to your, express tonnage? Any prime sectors that are already existing, or any sectors that you want to target? Either way, any thoughts on that? Yeah.
Okay. Without getting into the last bit of granular detail, the way I want to respond, the industry segmentation, which is kind of tapped into by various express distribution players, that is very well known. It is published information, which industries, auto, apparel, engineering, electronics, pharma, etc. So that is published information. We are also into all of these industries. In general, I'm not making a GATI specific comment, I'm making an industry specific comment. In general, apparel took a little longer to come back on stream. The rest of the industries actually were a step ahead, especially I'm saying the electronics and engineering and those kinds of industries were a step ahead. Apparel took a little longer. It was only closer to the festival season that suddenly the activity in the apparel industry kind of jumped many-fold. And it looks like it is there to stay. It looks like people are shopping with a vengeance. Hello?
Yeah. So that's all from my side. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, we'll take the last question from the line of Aman Bij from Astute Investments. Please go ahead.
Good evening, sir. I have two questions on the again on the express business only. So the first question is, could you give a rough breakup for FY20 and for H1 FY21 in terms of your three key segments which you just talked about, enterprise business, SME business, and say your cash and carry business?
I would stay clear of that, if you don't mind. I'm saying I don't, because that is a very useful information in the market. I would stay clear of that. I'm saying in general, cash and carry happens to be 20%. The credit happens to be 80%. This has been a long-term trend for us. I would limit it there. Yeah.
Sure. And in terms of traction, you talked about SMEs just coming back now. So by end of year, do you see it coming back to for the overall year, coming back to the FY20 level?
I do. I think their activity, like I said, was slow to start. Somewhere in August is when we start seeing the first signs. I'm saying I'm putting a pass mark percentage of 40% activity. I think they were slower to start, but within September, October, it looks like there is a sudden spike. There are many industries where SMEs have kind of come back to their full level. There are other industries where it is taking a little bit of time. For example, even the normal, the larger customers in apparel took longer, I told you, right? And similarly, you can imagine that the SME customers in apparel would take even longer, right? So there are SME in industry segments where they are already full throttle. There are SME in other segments where they are not in full speed as yet. But I do see them, given the activity that we are seeing on the ground now, I do see all of these people coming back. I'm saying within the course of December, January, February, March, I think they should be operating in full. I don't hold the view that many will go under. I think many of them are stressed out, there is no doubt. But I think they have shown remarkable resilience to figure out ways of managing their cash flows and be back in business and generate demand. So I do see tremendous resilience in the SME sector as of September, October.
And sir, is there any gross margin difference between these three segments for us?
The yields will, of course, be different. I'm not in a position to share specific numbers around that.
Maybe you can tell which is the highest one and which is the lower. Just the order, if not the actual numbers.
Yeah, so the retail cash and carry will be the highest simply because they actually will have much lower volumes to offer. The larger customers will be the lowest because they have higher volumes to offer. It's only a question of volume game. It is not like it is basic economics at play.
Sure, sir. And my second question and the final question is regarding the vision which you have talked about in your presentation of growing greater than the industry, and industry grows about, say, 15% to 20% range. So what kind of volume growth are we envisaging for us for the next 5 years?
So the industry growth between 15, 17, 18% is what is there. I'm saying we have already called out, we want to be beating the industry. I would leave it there. I don't want to give further guidance with the numbers around it.
Okay. And in just small clarification, in FY21, have we taken any, is it mostly volume driven or there's some price factor as well in our growth?
Combination.
Sure, sir. Thank you. Thank you for the clarification.
Thank you very much. I will now hand the conference over to Mr. Ravi Jakhar for closing remarks.
Thank you all for joining us on the earnings call, and we look forward to being in touch with all of you. Thank you for joining us today.
Thank you all. Good night. Thank you.
Thank you. Good night. Thank you.
Thank you very much. On behalf of Gati Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.